Okay, thank you for that confirmation. So today's session is about customer risk scoring process in a bank, and we will understand the process that's followed by banks, and we'll learn the manual way of doing it, how banks used to previously do the risk scoring. So the manual process, the delays associated with the manual process, and how digitization of that process, the automation of that process can give benefits to the bank. Okay, so that's what we are going to see in today's session. And enhancing customer risk profiling is the main objective of this particular bank. So before I get into a case study and tell you more about the difficulties, the challenges this particular bank is facing, let me call upon Sapna to give us a background about what exactly customer risk profiling is and why a bank needs to do that. So many of you might be wondering, when you open an account with a bank, why do we need to submit so many documents? Why do they ask for so many proofs and all of that? When you understand customer risk profiling, you will get a very clear idea about why these documentation has to be provided to the bank and what the bank actually does with it. So many of us who are not from the banking domain do not know the back-end processes associated with it. What does the bank does? What do they do with the data actually? So today we will learn that, and this will give you more insights about how the bank uses your data. Okay, so right now let me just call upon Sapna. Hi, Sapna.
Hello, ma'am. How are you, ma'am?
Good, good. I'm good. So let's start, Sapna. Go ahead and explain the customer risk profiling process so that we get a starter for our case study that we have to present.
Can I share my screen, ma'am?
Yes, sure. You can do that. Let me give you permissions.
Yes, ma'am.
Yes.
Hello, everyone. My name is Sapna. I'm here to give a detail about the risk profile of a customer in a banking industry. Like, what is a risk profile? Actually, it is all about assessment of the potential risk a customer poses to the bank. If suppose one customer approaches to the bank to open an account or to avail any credit facilities, now it brings some potential risk to the bank because customers have many categories. Either it is individual or business customers or any government body. Everybody is called here customers only. So every customer brings some potential risk to the bank, and it is categorized according to their risk profile. Now, what is the risk profile here means? Risk profile actually, it is if us individual in the category of the salaried persons or transparent salary, his income is like transparent income, or any NGO that are they are in safe hands. They are like safe to the bank also, and their risk profile will be categorized according to that. If any political exposed person is there, or any customer from the like from the country where risk is more, like from Pakistan, Syria, that also risk category will be different. And if it is like moderate type of customer, like medium class of business he is doing, or like any cash sensitive business he is doing, then that category will be different for them. So what will be the process in the banks? Actually, in current process, as per the case study, we have to put like banks are doing their work as manually. They are, while opening the account, they have to create their customer ID according to their like salary, income. They have to give the key assessment to the customer, particular customer. Suppose a individual person who is salaried person, his income is coming to the account directly. That is white money. That risk will be low risk. Then, if suppose one customer approached, he is a business person, but his income is like sometimes it is very much high income, or sometimes it is actually low income. Because it depends on the business profit only. Then we can mark it as a medium profile customer, medium risk profile customer. Or sometimes any person like that is political exposed person, suppose, is coming to the branch and he wants to open an account, and but his linking is with the high profile business persons, that will come under high risk category. So when any customer approach to the branch and we have to open the account for that particular customer, then that customer risk profile we have to enter in the account opening module in the banking system. So in as per case study, in current process, we have to enter it manually. And this is all depends on the officer who is entering that category, or on the branch end who will approve that category, risk category. So this is the risk profile of a customer, that is low risk profile, medium risk profile, and high risk profile. It is all.
I'm sorry to cut you, Sapna.
Yes, ma'am.
Are you changing slides? We can't see. We are just seeing the
Also,
first slide.
yeah, this is actually base I have covered up here.
Okay.
Now, this is the what is the actually risk profile that I have discussed there. That is low risk profile, medium risk profile, and high risk profile for a customer. Like this is all about that only. A customer risk profile evaluates how much risk a customer poses to a bank when he comes to approach to the branch to open an account or avail any credit facilities. Like it is mainly depends on KYC norms and AML, anti-money laundering compliance. KYC means here know your customer. The what is your customer actually, from identity part till their income, everything about the customer. And it is actually this term risk profile is very critical in the banking industry, because it only on it depends all the due diligence of the customer. The risk types of the if we don't do any risk assessment properly, if a bank officer don't do any risk assessment properly, then what risk a customer can bring to the branch, like money laundering, either it is a fraud, credit fraud, or terror financing. Suppose he is coming from any another nation, international nation, like suppose he's coming from Pakistan or Syria, maybe terror financing will be there in his accounts. Or credit risk, if he's availing any loan facility, that risk will be there. He might be fraud. So as I told you before, there are type of customers like individual, company, business, political exposed persons who are the customer for the bank, and they bring potential risk according to their risk level. Now, it can be for like geographical location, as I told you before, high risk countries, suppose Syria, Pakistan, and many more are there, from where terrorism activities will be there and financing will come from them. Then it is depends on nature of business. Like if a business have high cash sensitive industries, like suppose it is a business related to crypto, then it is a high sensitive. So high risk will be there. Then sources of fund, if we can't traceable the source of the income, that also will become under the high risk. And suddenly, suppose any transaction, next part is transaction behavior. Suppose suddenly any large amount of cash has been deposited in the account, and source of that cash we don't know, and it come from the other country, that also will come under high risk, sorry. Then delivery channel, we don't know about the delivery channel. It comes in the online nowadays. It usually happens online only. So we can't trace the transactions, but if in automation we can activate the triggers, we can activate that flag, where if these things happens automatically, it will trigger and the notification sent to the officers or branch persons, any staff, and so it will make them extra diligence. We have to take care of these transactions. Now, I already discussed low risk profile, medium risk profile, high risk profile, like salaried person, local resident, low risk country, no unusual transactions, like no high cash deposit transactions. Medium risk will be small business persons, residents in a country under FATF, use cases and branch banking, occasional high value transfers, occasionally, not like regularly. Then high risk persons will be like crypto trader, high risk jurisdiction like Iran, North Korea, Pakistan. Like this, these are the categories of the risk profile for a customer. While opening the account in manual system, we have to update their data in the system manually. Now, current processes for giving risk profile to the bank will be like manually data entry of the customer profile. For example, while opening the account, as I told you before, or subjective scoring by branch officers, branch heads, or regional officers. They have to, as per their expert judgment or as per their experience, they have to use some models and they have to put that risk profile into the system. Or because this is all based on manually, so no audit trail, because usually this high low risk will be a small, because I am from the banking domain. And I have seen while opening the account, this is only a field where we have to put low or medium, or we can, as a clerical mistake we can do, we can skip. Or sometimes what we can do, if it is a high profile person, mistakenly we put it low profile. So this is all a high risk actually, if we are doing it is as manually. So what problems it can occur if we do this type of manually things, like if like mistakenly we have put it from like not high risk, we put it as low risk or medium risk, suppose political exposed person. So what will be the outcome for that? Like regulatory actions violates, because these all regulatory policies will be come from RBI or other regulatory firm. And if we are not doing that, we violate the rules of AML and KYC norms, then penalties will be there for the bank, and it will be high amount of penalties. It is not like 1 lakh, 1 crore. It will be high penalty because this is breaches of the rules. Then compliance breach, failure to detect high risk customers, um, because we are doing manually, and auditing are not supposed to check the profile of the customers. Like they can't check every account of the customer, like this is high profile, they have put it is a low profile. This is compliance breaching financial laws, because penalties or maybe some fraudulent transactions has happened, money laundering has happened, that is also financial loss for the country also. Low risk visibility, delayed detection of the fraudulent, because we are doing manually and auditing also not done. So the detection will be like we can't actually detect that kind of risk. After fraud has happened, that only we will come to know this has done, and then we will check. Then auditing will happen. What is happened? Then if we see, that will be that will we see in the account it is low profile. That is all manual, because of manual. Weak internal controls, audit trail missing, these all things will happen if all processes are manually, because we are humans and we can do mistake, and humans only will do mistake. How automation of risk profiling makes a bank safer? Like this is all about this case study. How automation, like if we make this process digital and automatic, like AI based automatic, then how it will be affected the banking. See, eliminates manual errors, because we are not doing now manually. We are not putting key risk profiles manually in the account. Automatic, while suppose we are opening the account and we are uploading the KYC documents and all about information about customer, like income and all, automatically system will according to that business rules or according that conditions, it automatically put that risk profile, and it will make it alert like this customer is high profile and this customer is medium profile. That will be trigger point for us. Then enables real-time risk detection and response. When we are creating it automated, it means it is real-time. Whenever we open the account, that directly real-time basis, it will affect in the banking records. Then triggers timely alerts for suspicious profiles. Timely, same thing. Like if there is, suppose we have opened the account and system has categorized is a high risk profile customer, and any suspicious activity happened, that also we can make it automated. Suppose he has deposited 20 lakhs in saving account in one day. That is suspicious transactions, and according to their risk profile, it can be identified easily. Then enhances monitoring and reporting capabilities. Like if this type of notification comes to the suppose branch head or management, then that monitoring and reporting will be very easy because it all are automated. This is the benefit for automation of risk profile. Definitely it will be a big beneficial for the banks as well as for the customers. Then this is the conclusion. What about the automating customer risk profiling? Transform a reactive error-prone process into from reactive to proactive. Reactive here means after it like if manually we are doing, it will be a reactive, because after fraud has been done, then only we will take action. But in this automated process, it is a proactive. Before we are taking action, so we can reduce the frauds, we can reduce the terror financing and all. So this will help actually, and that financial crime, reputation of the bank, regulatory breaches, all will not be happen in this process. Thank you. This is all about risk profile of a customer.
Anyone has any questions? Thank you so much, Sapna. That was really very nice presentation. That gives a starting point for all the people who are aiming to get into the banking domain as a business analyst. So Sapna comes from the banking world, and he has, I think, 12 years, right, Sapna? If I'm not wrong,
Yes.
12 years? Yeah.
13 years.
13 years of experience she has in a bank, and now she's moving into an IT business analyst role. So being a domain SME, she intends to get into IT and use her domain and build IT applications. So she has completed our project implementation mastermind, as many of you over here. And many of you know her, that she has been coming to our community classes and doing activities for our students here. Okay. This week, we also have two ECBA pass outs. So our last batch of ECBA training as per the old syllabus is ongoing. And this week we have Vinolia and Preeti. Okay, Vinolia and Preeti, who have cleared the ECBA exam. So a very big congratulations to both of them. They couldn't make it in today's call, but probably next week they will be there, so they can talk more about their experience in the exam. So we'll get them in the next call. Sapna and Angavi has been very instrumental in hand-holding students from our community who are giving the ECBA exam, especially the last batch who is rushing to give the exam before the syllabus changes. So thank you so much, Sapna and Angavi, for putting in that extra hours and helping them through the exam process.
Thank you, ma'am, for giving the opportunity.
Sapna, before you leave, anything you would like to say about the ECBA preparation for the people who are just going to prepare now before the exam changes?
Yes, ma'am. I want to suggest something. Like I think before 20 they have to give the exam, as per my knowledge.
Yes.
And one person, I don't remember the name, he contacted me and he asked me, without Babok reading, can we give the exam? I told him like, no, it can't be possible. We have to go through Babok first. then mock test, chapter by chapter, then again webbook, then again mock test. We have to teach our mind that memorize that keywords, and this can be happen with practice only. And as much as we can practice, we will definitely clear the exam. And as like my case, I took only 1 week for preparation, less than 1 week only. And during that period, I go through with Babbook 3 times and 3 to 4 times all the mock tests, whatever has business hub. So I suggest all the aspirants, like you go through Babbook, don't leave Babbook alone. You go through Babbook, then mock test, and that repeatedly you do this because that mind captures the all the keywords. And while giving the final exam, it will be easy for you because you have already given as much as mock test, and at the time of final exam, you see it is like a mock test only, and you will be more confident. So this is the only advice for me to the all the ECB students.
Thank you. Thank you so much, Sapna. Thank you. Thank you for that. By the way, I forgot to tell, Sapna has scored the highest in the ECB exam when she gave it. Last month you gave, Sapna?
March, ma'am. In
March.
March, 20 March.
She gave it in March and she has got the highest score. And that's the reason she has been mentoring others and helping them clear the exam. So yes, for people who are going to sit for the last batch this month, yes, Sapna is the go-to person for any
Yes,
kind of help that you.
I can help, ma'am. At any time, I'm free. I can help.
Yes. Thank you so much. Sapna. Thank you so much.
Sorry to interrupt, ma'am. I have one question to Sapna regarding
Yes,
the
Chinmay.
Babok, and
Yes.
thanks for sharing your experience first of all, Sapna,
Okay.
regarding your examination, and congratulations for your score also for that.
Thank you.
Uh,
Thank you so much.
I wanted to ask you that we can cover Babok in 1 week overall. You told me that
Yes,
in
definitely, definitely. You can cover 1 to 2 hours for one chapter. There are hardly 4 chapters you have to go through, like
Okay.
4 to 5 chapters. One chapter, ninth chapter, underlying competency. It is hardly will take 1 hour for you. And I read that chapter the last day only, at the day of my exam only. That techniques also one time I have gone through, and while giving the readiness test to ma'am has told me these are the main points you have to remember. These two chapters only one time I have gone through. Okay, but apart from this, whatever the knowledge area, all chapters 2 to 3 times I have gone through, and within 1 week, and I have given mock test chapter wise chapter, like and at the end of the last mock test when I have given that, that was like I know everything. So 1 week, if you dedicatedly give the time, then it is sufficient, I think. According to me. But you have to give dedicatedly time to this. You have to justify your time.
Sure. Thanks for this input. Thank you so much, Sapna. If anything we require, definitely I will reach out to you regarding that.
Yes,
Sapna.
yes, surely, no problem.
Thank you. Thank you.
I have something to say, ma'am.
Yeah, go ahead.
It's like I have
Turn your
seen.
camera.
Oh, sorry. Yeah. During this ECBA preparation, the one thing I also did and the others also doing is taking more time between preparation and the examination. That's what the mistake the members are doing. They are not very constant about it because they feel that the Babok is seeing the Babok. They feel like it is like very big book. How I can read.
They get overwhelmed
like
by
that. Yeah. And
I
the
agree with
mistake.
you.
Yeah.
But it is not like that.
It is not like that actually. If you ask us now, me and Sapna can tell in which chapter what is there, because you should go through like that. You should be very much consistent about it. Okay, like if you are sitting with in 3 hours or 4 hours in per day, you have to complete at least 1 or 2 chapters completely.
And
That's
underline the key points. Every line, every description
yes,
and purpose.
yes,
Purpose and descriptions mostly having that key points. And you have to
yeah.
underline that key points, and every time you have to memorize that key points. From there only you will get the question.
And moreover, you just read the purpose and description as a story. Like whatever we are doing in the Friday class, ma'am will explain something, some case study, right? Keep the case study in the mind and read the techniques and contents as a case study itself. You will remember. Okay, so that's what me and Sapna did, and we could easily do that. And others also, like Vinolia, Vinolia has given
Yeah.
she has given only uh, 6 to 7 days for the preparation, I think so. And last day she contacted me and asked what are the steps to need to be readed. I have given some hints as Sanchana ma'am has given us. That's it. She has given the exam. After the exam, she called and told me, uh, I I I passed, but the question is like with twisted only, but I can answer it because the key points she repeatedly she had remembered it every
Memorize.
day. She's also working. She's like work from home.
Mm.
Now also she has a call. That's why she couldn't attend it. But anyway, she pushed herself and learned at least
Yeah,
2 or 3 hours a day, and she has given. So the main important thing is be consistent about the learning. That's all. You can give the exam.
Fix a time of the day, either morning,
Yeah.
evening, which is whichever, and allocate that time to your study for 1 week dedicatedly without any misses, because we are very short on time now. 20th of
Yeah, yeah.
July is the last date, so you can't even can't afford to make misses. You can't relax and take the exam. So 1 week is that's what is required. You are given all the course materials. BEBOK in a condensed form is also given to you, so it becomes easy for you to memorize. For people who are thinking about what are the changes post 20th of July, that is from the 21st of July, the syllabus will include one more book. So BEBOK remains the same, but there is an additional book that gets added. So which means you will have little more stuff to memorize before you do the new exam. So that's number one, addition of one book. Number two will be the exam format. The questions in the exam will be now scenario based. Current exam has to the point questions, but now the new format will have scenario based twisted questions. That's number two. Number three, people who give the exam after 20th of July in the new format, they will get their results only in October. Okay.
Oh.
Right now, whoever is giving the exam, you get immediate exam result. Whether you passed or you failed, you get immediate result. But 21st July onwards, whoever gives the exam, their results will be held by IIBA, and the results will be given to you. Pass or fail will be told to you in October, because that's the first batch that will be taking the exam after the format changes. Of course, after October, IIBA might be having a different process in which they reveal the results. That's not been told to us, but 21st July to October, whoever is giving in July, from 21st of July, all their results will be declared only in October. So these are some main changes that are happening.
Sorry, sir, ma'am. Sorry to interrupt you. Actually, I have to leave. I have to visit a doctor.
No problem. No problem, Sapna. You can leave.
Okay. Thank you so much, ma'am.
Okay.
I will be available for ECBA. You tell me anytime.
Thank you so much,
ma'am.
Sapna. Thank you, Angavi.
Okay. Thank you.
So now I will take you through that case study. Sapna has set the stage with explaining us on customer risk profiling, what exactly it is. We will go through a case study, a project background, And these are the case studies which Angavi was talking about. When you go through these case studies, you will be able to relate web concepts with these case studies. And that's how you will it will become easy for you to learn the concepts. Now, as per this case study, new case study that we have, a bank has this entire customer risk profiling process in the manual way. So we will learn what are the problems that they are facing and what is the access process and the to-be process. And if the time permits, we'll also go to breakout rooms to create a process flow diagram for that. Okay. So in the current process, the customer risk scores are assigned manually by the operations team at the time of account opening. Like Sapna already mentioned, the customer risk profiling happens when the customer is onboarded by the bank. So whenever you go to the bank to open a new account, there's a lot of background verification that the bank does before it actually gives you your account number. Okay. So the goal here is to ensure, now this particular bank wants to develop an automated risk scoring engine. They're currently doing everything manual, and I'll show you the access process that will become clear. But their goal is to develop an automated risk scoring engine that will help them develop a rule-based risk scoring. Now, something different that you will see here is, here, the rules engine that we are going to talk about is a part of your system inside. So these kind of projects, when you work on, you don't have an interface. You don't have any user interface, I should say, user interface, because this is the logic that you will have to document for your technical team to code for it. Okay. Let me familiarize you with the current process. Okay, just give me a moment. Let me get my PPT. Yes, I have it. Here. Believe everyone can see my PPT. So bank's current process for customer risk scoring, access process. A customer walks into the branch to open a savings or a loan account, whatever. The relationship manager or the branch officer collects physical documents. Whoever was there on the desk, they collect the physical KYC documents. Customer information is then entered manually into the core banking system. Okay, they have a core banking system, and every bank has this core banking system where all the customers' information is maintained. There are documents like PAN, Aadhaar, income proof, employment proof, etc. Whatever the bank needs are uploaded in this core banking system. Now we start the risk assessment once all this data comes into the system. The branch officer refers to the risk assessment checklist or policy document. Based on a manual judgment, a risk score or category is selected. And what is that category? Low, medium, high. High-risk customers, like Sapna just mentioned, if they feel that these are high-risk customers because they're foreign nationals or cash-intensive businesses, then they escalate it to the compliance team for further review. So the file goes from one desk to the other. Okay. Sometimes this escalation is delayed or skipped due to the workload. Okay, see how these loopholes we come to know in the manual process. Account activation. Now, if the compliance team is okay and they don't raise any objections, then the account gets activated. Otherwise, it is kept for further review till the time they are convinced that, okay, this person is an authentic person. Now that we understand the current process, the business problem, let's understand the business problem. First of all, manual entry of customer profile and documents. Manual entry, there's They may have lots of files where customer profile and documents are mentioned. A lot of error will happen in a manual entry, right? Now, subjective scoring by branch officers. Subjective means they go with their gut feeling and they give a score to that customer. No audit trail why a customer is marked as high risk or low risk. There is no audit trail. I hope everyone understands audit trail to understand the reason a particular customer has been marked as high or low risk. Delayed alerts to compliance for high risk profile, because it's not happening by a system, right? Somebody has to inform another set of people. No integration with other watch lists. What do I mean by watch lists? There are certain watch lists maintained by the bank, like PEP, that politically exposed persons. If that person belongs is a politician or something like that, then they are again placed in a watch list. So that's the external. So it's not integrated with external watch lists currently. So, like I told you, the problems that they are facing, and I told you that they are looking for an automated risk scoring engine, which will ensure a rule-based risk scoring. Rule-based. And what is that rule-based? We're going to see that. They plan to automate entire CDD, that is customer due diligence, and flag high-risk customers for enhanced due diligence, which we call the EDD. Okay. Now, let me show you. There's some few here. I have just joined our recent project implementation mastermind. So don't worry if you're not getting today's, to what we are discussing today, because you're yet to get into business analysis. Okay, you get to yet to understand assets and 2B. So when your classes start, this will be explained to you in detail, and then you'll get it. So don't worry about it. Now let me show you the 2B workflow. Yes. 2B workflow steps. Customer onboarding. When the customer onboarding is initiated, customer submits the KYC account opening information, either by going to the branch or online, he might submit. The core banking system captures all of this information. Currently, even adequate information from the customer is not getting captured because it's a manual process. Now, step 3 is very important. This is from where our work will start. Automated risk scoring triggered. Risk scoring engine is triggered once all required KYC fields are entered. So this is the start of our process. Once all KYC fields are entered and verified, the risk scoring engine gets triggered. And it calculates the total risk score based on a rule-based matrix, followed by the compliance team. And it assigns a risk category, low, medium, high. Some scores, so 0 to 30, they classify as low, 31 to 60 will be medium, and greater than 60 is high. Step 4, a real-time risk score display. So if you go back to step 3, if you see that this digitization automation has completely removed the manual process where they were just giving a risk score based on their gut feeling to a customer. This is actually based on the data that has been entered in the core banking system. The rule-based engine is giving a score based on a logic, not a random score. So the manual process used to, is just a random allocation of a score based on certain assumptions. Here, real-time risk score display. Now, this on the customer's profile dashboard, you might be able to see this even in your dashboards. When you log into your net banking portal, there is a separate section where your risk profile is displayed. Have you guys seen that in your net banking?
Yes.
Yes. So that is a real-time risk score display. So you have to relate to that screen because you have already seen that screen. That is the real-time risk score that's displayed in the customer's profile dashboard. Okay. And this is viewable by either relationship manager as well as the compliance team. So many of the times you must have observed when your relationship manager calls you and says, they usually call you for some investments and things like that. When they call you up, they say that, okay, as per your risk profile, I see that you are a medium risk taker. So these are some of the funds that I will propose for you. Okay, but that's because he can view that risk profile just like how you can view it. Step 5, automated alerts for high risk profile. Okay, if a customer is flagged as high risk, the system sends a real-time alert to the compliance team. So now compliance team doesn't need to again manually verify whether a customer is high risk. They just get an alert from the system. And this account is automatically put on hold for enhanced due diligence. How cool is that? That account gets automatically put on hold. So you see, all of this is removing that delays where the compliance team has to come, they has to pick up a respective file, okay, then they flag it for enhanced due diligence. No, so the time taken is just within few seconds, it passes from one layer to the other. Step 6, which is compliance review and final decision. Compliance officers log into the compliance risk portal, review customer data and scoring breakdown. So step 6, the compliance officers, they review all the scoring that's given by the system, and they can either approve or reject, or they can ask for additional documents. Okay, and step 7 is the audit logging, which I told you in the manual process, we didn't have any audit logging. So, however, although in this 2B process, the system is doing the scoring, system is giving a score to the customer, but all that scoring logic and the actions, the decisions, everything gets stored in an audit trail for regulatory audit. So anytime any question arises about why a particular score was given to this customer, you can look at the audit trail. So you'll see, even when you look at your risk profile, your risk profile keeps on getting updated. They might have created a risk profile for you at the time you were onboarded into the bank. Then further on a, I think it's a half-yearly basis, or they review the risk profile of the customer once again, and you might see a slight adjustment in your risk profile. Maybe you, from a low risk person, you move to a medium risk or something like that due to some specific activity you might have done. But all of that logic by which you are getting a different score in risk is all stored in the audit trail so that it can be reviewed. Everyone with me so far? Great. So this is the automated way of giving risk scores to customers. And we will see one functional requirement which is written to calculate these risk scores. Now, the challenge for writing requirements for the rules engine is, like I said, in these kind of projects where you are building a rules engine, which kind of acts as a middle layer, why? Because the front layer might be where the customer is getting onboarded, customer details are uploaded, the KYC documents, everything. The middle layer gets only triggered when the entry of the customer details, the KYC documents, everything happens. That's when the middle layer gets triggered. So if you're working in a project where you are building a rule-based engine, you might not have a user interface. There's no entry happening. The user interface application might be handled by someone else, or maybe another part of your team, but you are now focused in writing functional requirements for the rules. Now, how does functional requirements for building a rules engine like this look like? Let me just show you an example of that. Moment, let me share this. Take a look at this. Now, the requirement from the customer said, from the bank said, the system has to automatically calculate customers' risk score during onboarding by applying certain predefined weights to multiple risk parameters. Okay. Now, the keyword here is predefined weights and multiple risk parameters. So when I go to a requirement gathering session for gather this kind of requirement, when I get into a requirement gathering session, this particular statement that you're seeing in the description column is a high-level requirement. It does not give you complete clarity. The two keywords that I mentioned, predefined weights, multiple risk parameters, is a big question mark for you. Okay. You know, calculation of customers' risk score has to be done. That is clear. So in my requirement gathering meeting with the customer, I will emphasize on these two keywords which I mentioned. What exactly qualifies as predefined weights for you? What would be your definition of predefined weights? We need to get it from them. We can't create any rule that we feel is correct inside the engine. The risk parameters again will be given by the bank. What are those multiple risk parameters that they use? So it will come from their manual process. Their manual process might be having multiple risk parameters. They will give you that. And based on that, based on the information that you get in the requirement gathering meeting, here is that sample requirement, which gives your technical team complete clarity of what they need to code for. Number one, it mentions the system shall evaluate data fields such as nationality, occupation, source of funds, monthly income, and PEP status using a weighted scoring matrix. Again, this weighted scoring matrix, you have to develop the scoring matrix in conjunction with the customer. The scoring matrix will just contain, 1 to 10, what is the category? That will be the matrix, but you have to sit with the customer to develop that matrix. Each parameter shall have a configurable weight. So here the scoring matrix, they are further clarified. Each parameter will be having a weight attached to it. For national, 20 points. Cash intensive business, 15 points. So you'll have to do an entire table which gives clarity to your technical team. What is the scoring that is used? The final risk score shall be a sum of all the parameters, goes without saying. The system will then assign a risk category based on the score threshold. Okay. And the example is given 0 to 30 low, 31 to 60 medium, and greater than 60 high. The risk score and category has to be displayed on the customer profile page after onboarding. Okay. So one more thing that you would like to add here, it should be displayed on the customer profile page after onboarding, also should be available to the RM and to the compliance officer. So they will be having their own screens where they can see these scores. Okay. This is for auto calculation of the customer's risk score. Any questions, guys? Any questions on this? Okay, since there are no questions, what we'll do is we'll quickly start with activity here to do a process flow diagram, convert the to-be process, to-be workflow that I just showed you. We will convert that into a process flow diagram and see how it looks. The challenge of converting these kind of rules-based engine into a process flow diagram is the identification of the actors. The actors here will be different systems here in this case. Like I said, here we are talking about the middle layer, right? So this will be different systems. And I'll tell you in some time when we go to breakout rooms, that time you will learn how to modulate this workflow engine in the form of a process flow diagram. I will quickly send this document, one document that I have created in the chat window so that you can read that. Let me just share this document with you. Just open this document, download it and open it so that you have it as a reference when we go to the breakout rooms to do the process flow diagram. Everyone has opened the document. Yes, correct. Some people are joining us from YouTube. Our YouTube live stream will end here. Thank you so much for the people who have joined us from YouTube. From here, we will take on with a class activity for our community members here, and we will go to breakout rooms to complete this to-be process flows. So thank you so much for the people who have joined us here on YouTube.